Welcome to the Defense and Aerospace Report. I'm Vago Muradian at the Reagan Library in Simi Valley, California, where we're covering the 2016 Reagan National Defense Forum. Our coverage is sponsored by Raytheon, and we have with us my good friend Byron Callan, who's with Capital Alpha Partners. Byron, thanks for talking to us.
Thank you, Vago. Good morning.
You track all of these issues very, very closely, both in Washington and on Wall Street and elsewhere, especially from a strategic standpoint about what affects defense industries, et cetera. What are some of the most important issues you think the Trump team is going to have to deal with? Obviously, there's talk of a bigger budget. The Congress has sort of approved that in the House version of the NDAA. But we also heard from Lindsey Graham, for example, that it's not going to be as big of a free ride, that this is not going to be an unlimited piggy bank. Give us sort of a sense of sort of how you see the environment. What do you see the defense spending picture looking like? And what are some of the things you're looking for from this conference?
I think the most important thing is first, you really kind of have to break this down. There's the underlying, what's going on with the global threat environment, how are allies going to react, how are adversaries going to react, and how are people kind of sitting on the fence going to react. And I think you almost have to take this day by day, week by week. The China reaction to the Taiwanese phone call, I think, is indicative of just how volatile this whole transition period could be.
Yeah, some of the U.S. response was also kind of elevated, right? But I get your point.
No, but I mean, I think because it really is very disruptive at this time. It's an entirely different style of leadership. It's an entirely different change of engaging with people, and I think, as a backdrop to this conference, there's been some core policies and practices that have been pursued since the 1940s, basically, and we're now kind of seeing maybe some very different paths emerge here. The other underlying issue, and I think this was brought up by Senator Graham, is there's been, particularly from the stock market, almost euphoria about what's going to happen to defense spending. And his comments about the difficulty of getting a consensus in Congress on defense, non-defense. You still have all the questions about where's the federal debt going to fit in this, and we're at the Reagan Library, and that was a very good example of an era where defense spending, sure, came up strongly in the initial years of his administration, but eventually the deficits really came to bear on this, and I think that's very poignant. It's a poignant to be in this building, in this library, with this person as a reminder that those debts and deficits will matter.
Well, and debts and deficits, speaking about that, so in March, there's a little bit of maneuvering room, obviously, but we're already at 19 point, close to 20 trillion, which then triggers it. What do you expect that debt battle is going to look like, ultimately? Is it going to be similar? I mean, Republicans are now ruling the roost, but how does this unfold? Because Democrats are going to try to make their voice felt on this.
Yeah, and I think there's an initial look. Right now, if I view this, I think, incoming president with a mandate for change, I think Congress, particularly the GOP, is going to cut him a lot of slack in the first year. The question for industry is what's really going to happen 2, 3, 4, or 5 years from now? You can't build a half a ship or plan a substantial rate increase only to have, holding a lot of excess capacity and maybe hiring more people than you need on this. So I think it's kind of in the to be determined category. I will say, at the start of the Reagan administration, U.S. debt to GDP, the federal debt, was around 30%. We're now over 100%. And so people have to keep that in mind when they think about this. And the markets are going to weigh in on this too. We've seen a rise in interest rates. So ultimately, interest payments on the debt are going to compete with the rest of federal expenditures.
You look at winners and losers from your standpoint as you look at the Trump team coming in. Who, on the industry side of it, who are the winners? Who do you think might be the losers? Or is this a rising tide that's going to lift all boats?
I think it's too soon to tell. I really do think, I don't think there's a Trump doctrine. I don't think there's a coherent view yet the Trump administration has expressed about how they're going to approach the world and how they're going to prioritize things. I think this is going to be it's going to be dictated by events, maybe the same way that when the Bush administration came in, that 9/11 absolutely changed the vector of what they intended to do with defense. So I think from an industry standpoint, you kind of have to sit back and not make big bets in 2017, but be agile enough so that if something really blows up in North Korea and in Far East Asia, that's going to require one set of defense priorities: Navy, ballistic missile defense, space, aerospace, kind of the traditional high end. If instead the focus is on Iran, and which is what we heard Graham talk about today, that could require a different set of defense capabilities. So I think it's not a time to make bold moves in any one direction. It's kind of be agile, but be ready to respond to national security needs as we see them emerge.
One of the things you've spoken about over the years is our allies and how U.S. policies affect those allies who have a tendency of buying from the United States. One of the concerns expressed here, and it's been expressed, whether it's by John McCain or whether it was by Lindsey Graham, but also on the Democratic side of the House, is whether the United States will back away from some of its allies. For example, the TPP. Senator Graham blasted the TPP decision and sort of said that's a great opportunity for China. A lot of American military commanders in the region have said, hey, look, the Chinese are very aggressive on all these axes. We heard from the Singaporean defense minister as well about how active China is. If there's for example, an easing of, say, Ukraine sanctions in order to be able to get cooperation with the Russians, or we see some other event in the Pacific, do you think that might have an impact on what have been steadily rising U.S. defense exports worldwide?
Absolutely. I mean, I think some countries will cast their lot with the United States. I think other countries are going to pursue hedging strategies. They may be less confident that the U.S. will engage not in an outright conventional war, but in this type of stuff that Russia has actually shown a great deal of adeptness in playing. What happens? It's not necessarily an outright invasion, but there's civil disturbances. All the other things that they've used very effectively in Eastern Europe. And
the little green men, for example.
Green men, exactly. And I'll say one other thing about U.S. defense exports. Look, if countries do actually spend more on defense, they're probably going to spend it on their own defense industries first. I mean, I think that would be a natural outcome of this. So there's something of an irony here, which is you could actually strengthen competitors to U.S. defense industry. The Koreans, the Japanese, the Turks, for example, all have next-generation aircraft programs. There's U.S. participation on those programs, but if they spend more in response to Trump's call, I don't think they're going to be buying F-35s, hand over fist to meet those defense needs.
And ditto in Europe, right, where there's a remarkably sophisticated industry.
There is. I mean, there are parts where the U.S. is still clearly competitive, but Huntington Ingalls isn't going to be selling naval vessels. Where no one's going to be buying nuclear submarines from the United States. Will it generate more interest in missile defense programs? Well, you've got MEAD, so Lockheed's in there, but I'm just saying that this shouldn't be viewed as all upside for the U.S. defense sector. The last thing I'll say, and I still think this matters a lot, is currency and currency exchange rates. There are people who think that the euro could go to parity with the dollar. The pound has been dropping. That matters in the affordability of some of these programs for countries that buy U.S. goods and services. And if you see protracted changes in exchange rates, it also is going to affect terms of trade in the defense sector.
You and I have been talking about reform, but also rebuild. That's the panel discussion that I'm going to be moderating a little bit later today. Do you view that these reform efforts that this administration has started, in part because of fiscal austerity and the need to address a wide range of challenges, is going to be something that's going to fall by the wayside in the new administration? Or do you expect it to be picked up and continued by the new team simply because it just makes sense, even if you're modernizing?
To be determined. It really is a to be determined. I think I really commended Secretary Carter for some of the outreach. I think he was a natural person to do that, to try and bring in the rest of the economy into national security. I worry that the Trump administration could rekindle some of these debates about surveillance, encryption, that had really pushed Silicon Valley away. And Carter, I think, had done a great job trying to mend those bridges. That disconnect is not healthy from a U.S. security standpoint. It's our primary strength as a nation, is our technology. And if you can't start bringing that into national security, someone else is going to take advantage of it, and it's not to our benefit in any way, shape, or form.
Byron, thanks very much for joining us.
Thank you, Vago.